And we're live. Welcome back to the Better Than Bitcoin podcast, where I talk about the future of money. I'm your host, Jamie Dabauskas. So this week has been a crazy week for me regarding Bitcoin, so let's talk about it. But for a brief disclaimer, if you only watch my podcast for the news part, there is no news today. There's so much market analysis that I want to go over, and also I want to do a little test if I want to maybe just completely just drop the news part of my podcast and just focus entirely on market analysis. That's what I like, I guess. Anyways, for a not so little market recap, I'm slightly bearish on Bitcoin in the next week or so. On the last episode of the podcast, I correctly predicted the slow move up from the 10,000 or slow move up to the 10,500 resistance and a strong rejection at that level. Over the last week, Bitcoin has had some healthy movements upwards from 9,800 and a healthy consolidation to go higher, eventually to the 10,500 resistance level. It reached it like twice or something like that. Once price action was showing that pushing past the 10,500 resistance was not so possible in the short term, I decided to book some profits and sell half my Bitcoin. The reason it was half is because I keep the other half on an exchange, and I keep the other half on the half I keep on the exchange I actively trade with. So that's the half I sold, and I have half my other Bitcoin in a cold wallet that I don't touch. I just have it there. So yeah, that's not as dramatic as it seems. So basically, here's what I saw in the charts and what I'm thinking behind it. I'm gonna go over it real quick. Actually, not that quick. So something I've been tracking since the beginning of the uptrend is I saw a clear Elliott 5 waves up off the low of 6,900. You can see from here, boom, 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 in 5 waves. But this is in a leading diagonal formation since all the waves are subdivided in 3 waves each. And though that since the supposed 5th wave has been trying and can't extend past the 10,500 resistance level, combined with the knowledge of a bearish divergence at the $10,500 top. The bearish divergence is in the RSI, I meant to say. Sorry, my script is weird. Yeah. See from this top right here to this top right here. I'll draw a line so you can see it better. So that's downwards. So that's lower highs in indicators and higher highs in price. So that is a clear bearish divergence right there. There and there. That's what I was talking about. I'm just going to move this off the chart because I'm talking about other things in this episode. Okay. Combined with that knowledge, so the reason that I saw that it couldn't extend past a possible 5th wave, combined with the knowledge that I saw a bearish divergence, it was enough info for me to not really confirm a top, but to be safe, basically have a safer assumption and sell. So if that 5 waves up in the leading diagonal is correct, there will be basically a bigger correction in place. I placed buy orders at the 50% retracement and the 61.8% retracement from this big move, this big 5-wave move. So I placed orders in this box. I placed orders in this box, and I have it weighted so that 75% of my order is at the $8,100 level. I just rounded up instead of 8,074 exactly. But a majority of my Bitcoin buy order, 75%, is at this $8,100 level, and I have 25% to buy at the $8,500 level, just so I can protect myself if it bounces off of 8,500 and I still have a little bit in if it goes crazy. So yeah, just to explain further for the people who don't know what a leading diagonal Elliott wave pattern is, it's basically a regular 5 waves up like this. And instead of the 5 waves subdividing it into wave patterns of 5 waves up, 3 waves down, 5 waves up, 3 waves down, and 5 waves up, it ends up being something like 3 waves up, 3 waves down, 3 waves up, 3 waves down, 3 waves up, and it starts looking like zigzaggy almost, but zigzaggy in the upwards direction, if that makes sense. Another property of these common leading diagonals is that the 4th wave is now able to surpass the top of the 1st wave. So in this case, that doesn't happen, but that is a property of a leading diagonal that is very common, but it might not be in this case. In addition to that potential top information, my DeMark indicators, so I'm going to remove all this noise so you can see. So I'll remove all this. You already see my little box right there. If you want to look at it closely, just pause the video or something like that. I'll keep the box there. Okay. So in my DeMark indicators on the daily chart, as you can see, I sold right when the DeMark indicators gave me a strong sell signal, and the sell countdown setup, which is in green numbers, reached a height of 9, a count of 9. It can go higher if it's overextending, but it seemed, based on other indicators in the short term that I saw, like the stochastic RSI and regular RSI and even Bollinger Bands, it was a safe assumption that it would go lower, so I sold there. What else I want to point out? Oh yeah, right now on the daily, my DeMark indicators is currently in a buy setup, so that's the numbers in red, with a count of now 3. It just started a new 24-hour candle right as I'm recording. That's great. So if the buy setup count will be messed up if the next daily candle, so the daily candle right here that we're on right now, the 3, if this ends up closing above 4 bars behind it, then this 1, 2, 3 count right here gets messed up. So if it closes below 10,200, close of this one is 10,236. So if it closes above 10,236, then this sell or this buy countdown will be invalidated and will need to be recounted with potentially a new buy or sell setup in the DeMark indicator. So looking into a more short-term view, by short-term view I mean the 1-hour chart versus just looking at the daily chart. I have the tab open right here, so I don't have to like remove all the indicators and stuff like that. As you can see, these are the fib lines right here that I had before. So it's getting closer to the 0.236% retracement off the top. That will be a next short-term target, I guess. Yeah. So the stochastic RSI is pushing towards the overbought territory, which I wrote that in my script a couple hours ago. So now it is in overbought territory. It's just taking a breather from the downtrend by having this little pop up before another dump down. What else? Yeah, the MACD just barely made a bullish cross, or in this case, it already did make a bullish cross in negative values. So it's not above this line right here. It's still in negative values, which signals in a yeah, that's overall slightly bullish. And Bollinger Bands. I want to point out Bollinger Bands. I'm going to delete these lines so you can see the chart better. Okay. Bollinger Bands are tightening, or they were expanded when that little pop-up was happening, because I wrote this script a while ago, which I already said. So the Bollinger Bands are very wide open, which signals that right now this is a period of high volatility. But as you can see, it's starting to come back in and curve inwards. So it might be, this little uptick might be it. That might be my guess, because this is entering overbought. The Bollinger Bands is squeezing back to low volatility mode. Yeah, that might be it. It might have already retested the 10,000 level and ready for another downwards dump. Not exactly dump, but maybe a slow grind down. It doesn't matter. It's going down. I'm yelling timber. Anyways. So what these combination of indicators tell me is that maybe that Bitcoin might go up a little bit, maybe to retest a new resistance at 10K before resuming the downtrend. And it did just that. I just read that off my script. So while everyone was still slightly euphoric about Bitcoin smashing through 10,500, here, I'm going to go back to get off my chart. You can see me. Okay. So while everyone was still slightly euphoric about Bitcoin smashing through 10,500 slightly, or because technically it's like 10,530 or something like that on some exchanges. So people are like, oh yeah, it's through the resistance and going higher. I took a step back and was trying to be objective as possible to take some profit. And I'm really proud of that for myself because a few days later when Bitcoin dropped to where it is today, people are flipping bearish. People are, by people, I usually mean people on Twitter because that's where I am 90% of the time of the day. I'm on Twitter. So yeah, really proud of myself for stepping away and being objective and selling. I still can't be completely proud of myself because I haven't bought back in yet, but I'm proud of myself for seeing it coming and stepping towards being a better trader, I guess. So if you didn't listen or follow along to my logic of what I just spieled out, here's a quick summary. In the daily, this could be a start of a bigger downtrend if Bitcoin doesn't have a big pump and stays below the previous high of 10,500. Obviously, I'll reevaluate this if Bitcoin breaks back above 10K, which it's close to right now, but I think it's going to go lower in the short term. In the hourly, it looks like Bitcoin's going to retest the 10K resistance and possibly break down lower. And obviously, reevaluation if this breaks above 10K. Of course, it can, let me just show it again. Of course, it can chop right here and just go sideways completely around this little 9,900 to 10,000 range, and it could just be painful to watch. But, that's just part of trading, part of life. So anyways, that's all of episode 17 of Better Than Bitcoin podcast. I know it was only market update and no news, but I just want to see how I liked recording it this way. It's my show. I can do what I want. Anyways, don't forget to like the video and subscribe. Follow me on Twitter at Jamie Dabauskas, and peace out.